Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning, good afternoon, good evening, and welcome to Develop Your Edge with Anthony Crudele. I'm your co-host, Tom Schneider, CMT with NinjaTrader, and it is just like every other Thursday, a great day to talk to Anthony. So, Anthony, how you doing today?
I'm doing great. I got my camo on today, ready to go and battle with the markets, and we're going to talk about swing trading versus day trading, which I think is really an important topic because I actually believe that most day traders should probably be swing trading. And I know some people may not want to hear that, but I think most of them should be focusing a lot more on that because I think that day trading is more of is probably a more difficult path for a lot of new traders because of the amount of trading and signals and setups that they're looking for. And I think you have to be on all the time. And so I think that they should be adding swing trading into their routine because I think it helps them really just slow things down. And I think that's what we talk a lot about here, trying to find edge and trying to slow things down. And there's a day and time for day trading, but I don't think it's every day. So we're going to talk about that.
So Anthony, for those of the viewers that are new, they might be watching your show for the first time. Can you just define the difference between day trading versus swing trading? We might hear these terms, but I think there is, something that distinguishes swing trading definitely from day trading.
So day trading is in and out every day, multiple signals throughout the day, potentially, right? Some people might just take one day trade per day. That's a lot of the times what I do. Versus a swing trade is something that you're looking at on just a little bit of a wider time frame and something that you hold for multiple days. And, not necessarily always price will get us in, price will get us out. But with a swing trade, you try to have a little bit of a wider stop. I think you try to have actually a stronger hand in the market because with a swing trade, you want to be, I guess when I say stronger hand, I want to clarify what I mean about that is that you want to have something that you feel that you're going to really wait for the stop and you're probably going to fully wait for the target. So like that position is like, I really want that position versus like a day trade. And I've talked about this a lot with you guys is that a lot of times with a day trade, I might get in a spot. Like this morning I got short. Then it broke. I covered some. I got back up. I'm looking at it. Do I want to short it again? I'm rotating around it. I might move my stop down. I'm not going to make my stop wider, but I'm constantly editing based upon the market activity, right? And so like if I'm short on a day where it's setting up as a trend up day, I might be like, well, I want to adjust. Versus a swing trade, if I'm short, I'm just kind of like I'm short. And it's more of a medium-term bias that you're executing off of.
And that stronger hand is identifying maybe a trend that you can take advantage of. Okay, so I think there's a trend versus, like you said, just trying to get a couple ticks here, a couple ticks there, or riding a shorter wave, if you will.
Exactly. And the reason why I say swing trading is probably better for a lot of traders. Number one, you've got the micros. We've talked about this with the live trading. One of the things what micros is that people are over trading them. And I think that is just, it's a negative for them because they're trying to create edge in spots that they don't have it, right? They're trying to make money versus trying to protect capital and trying to really look for a setup that they really like. And they may get a winner that they're just making a little bit on and they're going, oh, well, I want to try and make more. And so that mindset constantly drives you to do more and more. With a swing trade, you could make a good buck with the micros and you're allowed to widen your stop and allow yourself the time for the trade to work. I like swing trading for newer traders a lot more because you're more adhered to the stop and you get to watch the market action throughout the day versus trying to come in and trade the market action. This morning, even in my Discord, I say this a lot lately. It's like, keep it light, keep it tight. It's something one of my friends in the pit used to tell me all the time. And it's just about trying to really, I go back to slowing things down and find a place, an area that you really like. And it's like, if it doesn't work, okay, no big deal, versus, I mean, obviously it sucks if you lose, but in the sense of trying to become a better trader, when you're swing trading, you're just like, okay, I see why that didn't work. You're able to evaluate yourself a little bit better. You're able to, allow yourself some time in the position, and you're allowed to giving yourself some time to look and see what's happening around it. And so like a lot of times, you're able to actually learn the little nuances of a market versus trying to over trade them all the time. And I think that's why I'm going to really go over today when I think you should differentiate the two, because I do think there's a time and place. Like sometimes I don't think you should be in swing trades, and sometimes I think you should be. And so we'll talk about that.
Great. It's like seeing the forest for the trees, right? When you're swing trading, you don't have to focus on every movement on every tree. You can take a bigger picture.
Absolutely. And I know that there's this need, and I know we're talking a lot about this, and I'm going to get to examples in a minute. I just want everyone to be patient with it. But there's this need, there's this feel that people feel like they have to do something when the market's moving. They feel like they have to participate. They feel like when they make some money that they have to make more money, right? Everybody's gone through this, right? I want to make $100. I want to make $200. You make $200, then you want to make $300. And in your mind, when you're a day trader, you're constantly pushing that forward. But with a swing trader, you are much more systematic. Even though you might be discretionary, your execution is going to be much more systematic, because you are allowing that stop to be hit and you're allowing that target to potentially get hit, right? I mean, you might adjust it a little bit, but you're not like, oh God, I'm short, I need to cover these right now as the market downticked, right? And so like right now, I'm actually in a short that I'm looking at as more of a day into swing position. And this, I don't want to confuse people, but it's one of those things where I'm going to let price get me in and get me out, but I'm going to trade really small to allow the market to do its thing. And if it doesn't work, it doesn't work. But at the end of the day, once again, when you get to a swing trade, you are allowing yourself time and have a stronger hand. So let's go to the charts, because I want to start off with, just give some context of where we are right now in the marketplace, because something that I talk about all the time, constantly on this show, is the Bollinger Bands, right? I talk about the Bollinger Bands. I talk about the 5-day moving average. Where are we with it, right? And I've done a lot of conversations about when that Bollinger Band starts to come back in and they start to get flat and they start to come back inward. So outward Bollinger Bands. If you look at the charts here, you'll see outward Bollinger Bands. If you go back in the middle of the chart, and you'll see outward Bollinger Bands, markets continuing in trend. It means expansion, range expansion. When you're looking at Bollinger Bands that are coming inward, it's mean reversion, and it's potentially range contraction, right? And so right now, we're in this moment where the daily Bollinger Bands are flat, and this is the E-mini S&P, by the way. And you see we're above this 5-day moving average. That's the middle red line. Bollinger Bands are 20 period, 3 standard deviation, and they're getting flat. And what's happening is that you're getting this mean reversion type move back in. Now, I know a lot of this is coming off of the Fed. We've had a lot of crosswinds lately. So I would just tell everybody to pump the brakes a little bit. Don't try to worry about every single move and why it's happening and what's happening. You're better off just picking a side and just trading it. And if you lose, just, take your lumps and move on, because trying to pick this perfectly is not the easiest market. I will tell you that first off. I've done very little lately. And when you look at these Bollinger Bands and you see the way it's trading, and the market is coming back in. And so I talk about always using my Fibonacci retracement, because the Fibonacci retracement is a great tool for me, not as trading fibs, as many of you might be familiar with, 382, 618, 50%, whatever else you want to look at, right? I want to look at where we are relative to the Bollinger Bands as they get flat. And so right now we're right in the middle. And so a couple things occur. And this is all leading to when I choose to swing versus day. The first thought is, anytime I have range contraction, right? Like right now the Bollinger Bands are coming back in. I am definitely going to be more of a day trader after we've come back to the 50%. And the reason is because once we get in the middle, it's probably a two-way tape. So right now, 50% line comes in at 42.95 and a half. That tells me that we're in the middle of the volatility bands, Bollinger Bands, and it's most likely a two-way tape. So anytime you look at your indicators and you see the possibilities of a two-way tape, you don't have a directional bias, right? It doesn't matter what my indicators are. It matters what you're looking at. Anytime your tools are non-bias in a strong direction where you could see a short setup in that day or a long setup, you want to lean more towards the day trade because you want to be able to be nimble. As if it rallies, you want to be able to sell it. And if it breaks, you want to be able to buy it. All right. And so that's the first thing. And you want to be able to recognize that from your daily chart leading to your short-term chart. Okay. So I think that's the first step of when to swing versus when not to. Now, the second thing you look at is when I like to hold a position is when there's two scenarios I like. One is on a trend reversal, if I identify there's a possibility of a trend expansion, right? And so that comes to what we're going to look at. I'm actually going to delete these Bollinger Bands here. In these charts, what I'm going to look at is any time that the Bollinger Bands start to come in really tight, like they are right here, if you look at back in the 16th of October and that block right there, when we start to come in below that 5-day moving average and you feel that you have a trend that potentially could start to take place as the Bollinger Bands start to expand, then you want outward. Bollinger Bands outward, swing. Bollinger Bands inward, day, right? And so that's my mindset, because when it's going in this direction, I really have a bias. I just want to be short. So the goal is to be short, but I want to be as small as I can so I can withstand the volatility. So hence, I want to have a stronger hand in the market. I want to buy puts. I want to do something that's where it's like, I want to be able to keep the position. I don't want to get squeaked out of it, right? And so I want to be able to stay short. And this is where I like the micros, especially a lot for newer traders. You come in, you look at the micros, and even for advanced traders, I use the micros sometimes too. And you look at it and you say, I want to be directionally because we're expanding outward. And then you use that 5-day moving average or whatever it is that you use as a guide. But once we start to come in and you start to see contraction and you start to see us around moving averages and coming back to, old VWAPs or all these, people will look at old high volume bars and all of these different volume profile type things. Then you want to be a day trader, because in those moments, you might be able to catch a move up, a move down, and all of these different moves. And so, Tom, I think we'll bring you back in. I think, and that to me is just that's just the first simple concept, I think, when I go to the charts.
Yeah, I agree with, Bollinger Bands, when they're expanding, it's usually because there's a direction. And so when you're swing trading, you want to catch that direction and you're not so worried about the day to day. You can look when those bands started to expand, the first, 3 bars closed near the bottom, right? It's trending market. And even with the retracement back to the moving average that you have, those bands were not contracting when that happened, and it resumed the downtrend after finding resistance. So it's really important to see, I think, with the Bollinger Bands, when they're expanding, there's a trend going on, and you want to be with the trend at that point. Now, and like you said, when they're starting to close, when they're starting to come together, that's when you say, okay, maybe this trend is not something I want to be in anymore, and you revert back to the day trading acumen that you have.
Exactly. And I'm actually going to share my absolute favorite swing trade. And what that is when you look at swing trading, as I talked about, Bollinger Bands outward swing, Bollinger Bands inward day. But I'm going to talk about the first move inward on a Bollinger Band on a daily is actually my favorite swing when it's a trend, when it's going against the primary trend and then a mean reversion back into primary trend like we have right now. So let me say that again to make sure everyone understands it. If the primary trend is up and we have a period, a cycle of when the market goes down, let's just say for 2-3 months, basically what we've recently had. But the primary trend for the year is up. Once we get a daily Bollinger Band to start to come back in, that's mean reversion back within a downtrend, but it is actually reverting back to the primary trend. And so why that's so important to understand and why that's actually my favorite look, and I'm really upset, kind of, not really upset, but I'm a little pissed because the way that the market bounced off of the prior 2 days, I was unable to catch it. And I actually wrote about that in my morning note. And it's just, it's my favorite because you want, and when you are in, people can argue this is a bull market or not, doesn't matter. NASDAQ's up double-digit percentages. I know the Russell isn't. There's a lot to be said about whether or not we're in a primary bull market or not. I'm not here to debate that. But the NASDAQ and the S&P, for the most part, have been strong for the year. I know it's led by the Magnificent Seven or whatever nicknames they've gotten these days. But the bottom line is that I look at this primary trend is still up. So if that's the case, when I see that the market pulls back hard like it did the last several weeks, once those daily Bollinger Bands come in, that is my favorite look to be long. Now, the reason why that is because anytime you have a trend against primary trend and then a mean reversion back to primary, that's when you get the sharpest moves. Because now the shorts basically are like, we've held this long enough. We can't hold this much longer. The bonds are railing. There's all these things that everyone's going to say. The bottom line is nobody wants to be last to buy in a short, and everybody is typically always looking to buy the dips, right? In most cases, in most markets. So therefore, you have the power of everybody behind you in those squeezes. And I love that the most. So when you look back here, the prior 2 days, we got back above the 5-day, and I said, we got to wait. We got to wait to see. You had a really strong day of Delta. You saw that the bulls are stepping back in. We get above the 5-day, Bollinger Bands get flat. Boom. Next thing you know, I'll go back to my, Fibonacci tool, and it just, let me go back to Fibonacci retracements right here. And you can see that we're back already to what I would consider is a reasonable area at the 50% area, right? And I'm going to go back and show you the last two. And these were really some of my best trades this year. And it's really because these mean reversions back into primary trend, they'll ramp them up pretty good. I mean, I'm going to go back and show you the next one too, right here. I know I could just be hitting F8, but I'm just in a mouse clicking mood. So let's talk about that. So look at each one of these times here. As this Bollinger Band, you see this right here. Let's go look to the middle of October. You see me on the chart. You see my pointer. We get above the 5-day. Bollinger Band comes in. Boom, boom, boom. 2 days up to 50%. You see that right there? And this 50%, look at how it just held very well. Let's go back to this day. Market was coming down for a period of time. Market gets Bollinger Band starts to come back in, mean reversion, boop, 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 up to 50%, right? And you can see it stayed above it steadily until eventually you get into this sideways tape where in here, you're more into, day trading. And so the point of it is like in my mind, I know what I'm looking for in what market environments. Outward Bollinger Bands, swing in that direction. Try to be in that position and hold it, right? I don't need to be too active. I want to try and milk it for everything it's worth. Oh, boom. All of a sudden, Bollinger Bands are starting to come back inward. Regain the 5-day, maybe regain some VWAPs. You look at it, go, boom, look for that mean reversion back to primary trend, and you try to hold it and say, how far can it go? Now, we've had a repeated pattern here, and actually right now, which is why I'm short small at the current moment. And the reason I am is because we got back to 50%. I had some old VWAPs. I don't have them up on this chart, but we're coming in between 43.05 and 43.19. So I'm short in this area, and I'll put a stop above 43.22-ish. My stop's just above there. And I said, if it gets above there today, I'm going to get stopped out. Who knows? I might get stopped out here in the next few minutes. But the bottom line is I look at it just to see, because we've had this repeated pattern of hitting 50% and rotating back down, right? And I know this is a little different because we're coming off of Fed Day. It's also, coming off of the first couple of days of the month. There's other factors, but that's what I look for. And so like for me, I know what I'm looking for. If it doesn't work, it doesn't work. I mean, I'm not going to be the first time I've been stopped out, but I have a mindset and I look at it and I go, I understand the context of the situations. I identify when I want to be in swings and when I want to be a day trader.
So, Anthony, I noticed that those prior two examples are great examples. Do you ever wait for the moving average to catch up before you really decide, okay, maybe we're in day trading, or are you specifically looking for that 50% retracement level to say, okay, this is where I think it could turn for a two-way tape for day trading?
I've just, in my experience, anytime we're between 70% and 30% in here in this boxed out area, which is really, to me, probably the range for the rest of the year, to be quite honest with you, is probably 43.97 to 41.91, 92 area. I now foresee that to be the range into the end of the year. I mean, who knows? They could go up to 43.97 in the next few days. I mean, I'd probably look to be a seller there unless these Bollinger Bands were outwards. But the point of it is that I just know once we get in this and we're sideways, until those Bollinger Bands start to expand again, it's unlikely that we just go from a straight down to a straight up. Now, mind you, it does happen. And that's what's interesting about, I think it could start to trigger today or even in tomorrow. All of a sudden, the Bollinger Bands start going outward again. And now what happens, and which is kind of interesting to talk about this, because if that does happen, this market could really explode. And all of a sudden, I look at that and I'll be like, okay, well, now I only really want to be long. And what's interesting about that shift is you don't see it often, is that the Bollinger Bands try to revert back into range contraction, and you try to get in a two-way tape in a boxed out area. But what could happen is that all of a sudden the top Bollinger Band goes up, the bottom Bollinger Band goes down, and we've reversed back above the 5-day, and all of a sudden we're getting near the top Bollinger Band. I've seen it happen. Where all of a sudden now it might be a trend up, and who knows, we can go to 45.50. I mean, it's not impossible. I mean, it's one of those things where right now it's actually today and tomorrow, obviously with Apple's earnings, and we've got unemployment coming up. The next few days I think are very important, and they're all important, right, in the scheme of things. But it really is for me on the charts, because if it starts to really, really push up, and it can happen, this market could really explode. Anytime, once again, Bollinger Band's expanding, I am not fading that market direction. Right now, they're relatively flat, and so I'm not scared to step in and trade a two-way tape. But if they start to open up again, who knows?
Well, and if we think about the mechanics of that, the calculation, for those bands to expand right now, you would have to be trending up, right? You would have to have a big trend
Correct.
up day, because you're kind of coming back into the middle of the range. So why would the bands expand? Well, because the range is getting wider than the bars that are falling off however many periods ago. I think do you have a 20 period bands, but it's three standard deviations.
Exactly.
Yeah. So for this to happen, usually you see the expansion when there's a trend and it's a definitive trend like we've seen before. But for this to happen, it would really have to be a conviction to the upside for these bands to expand again, which is what you're saying, right? I want to be in this trend up day. Real quick, Anthony, there was a chat in the chat. Somebody asked, they missed the beginning of the show. Shame on them, but glad they're here. What time frame are you considering as a swing trade? So if we could just review that for Chris.
So swing trades for me are always going to really come up on the daily, and I'll move into a 60-minute. I didn't show the 60-minute today because I don't like to really clutter this too much. I think we'll spend more time on these in a future Develop Your Edge, and we get into, I'd love to be able to get into a scenario where it's almost happening, or I'm in that position at that moment, like my favorite swing trade I talked about off that mean reversion. Right. But daily is where it starts, and the lowest I'll go is a 60-minute. And for me, my day trading is 60-minute down to 30-minute. With the daily is still that hidden bias in the background. It's not really hidden; it's forward. But you know where you're at with the daily chart, because that will lead the direction for the day trading as well.
Excellent. Thanks for that. Thanks for clearing that up.
Yeah. So, I mean, the only other thing I want to talk about today really is, I want to leave you guys with almost a final thought, is you got to keep an eye on the 10-year. That's the ZN. Make sure you watch the bond market right now, because if that's going up with equities, you could just really have a really very, very powerful rally from here. I mean, you've got there's this end of this year could be really, really wild. Today is showcasing on, you know, the power of what this potential move is. This 43.19 is really big for me. If it starts pushing above here, I mean, I got 43.73 to 43.97. I don't think is impossible. I wouldn't buy into it just yet. I have to see how the daily goes, but for the most part, I look at this and go, it's going to be really wild. And it goes back to small and smart, keep it light, keep it tight, and really just try to be forced into trades, because I could tell you this, I've been doing this a long time. This is not the easiest tape in the world. Momentum shifts on a dime right now, and you got a lot of year-end stuff. You've got a lot of crosswinds. Don't be in a hurry. Take your time.
Hear that very much. By the way, I know the CME Equity Challenge wrapped up. How'd that go? You were kind of the host of that in some respects, right?
Yeah, I was the host for that, and actually, I know that we have some other challenges coming up. I don't have that up on my screen right now, but the Equity Challenge went great, and I can tell you this, that it's a lot of fun, and I think that more people should be participating in these, because not only do I think that these challenges with other traders, you can win some money. I think that's obviously a part of it, but it allows you to test strategies with some skin in the game, even though it's not your money you're playing to win. It allows a lot of traders to see what they're doing and what's working. And so I'm really glad that CME does that. And I know that they have some other ones coming up here in the future. So stay tuned for those. You can follow, obviously, CME Group on Twitter and see what they're doing. But they're really a lot of fun. And I think that more and more traders, especially newer traders, should be doing them. I know new traders are out there and they're doing their thing, but going forward, I think a lot of new traders should be stepping in and trying them out, because it just gives you, like I said, that great opportunity to see how you're competing against other people, which is always fun, and also test your strategies to see how they're really faring up, and maybe you win some money.
Well, and I love what they did. As soon as that ended, I think the next day I got an email talking about the next one and sign up right now. So it's like, you know, they got it down, I think, you know, keep you engaged, right? That's really good.
That next challenge will be in the YouTube description down below if you're watching this here, and also on my website on the Develop Your Edge page for that next CME Group challenge. Be sure to go there and check that out.
All right. Well, thank you so much, Anthony. This is a great topic, and thank you, viewers, for coming. We'll do this again next week, 10:30 Thursday. That's Eastern time. We will have a time change this weekend, Anthony. We'll get a little extra sleep. This is great.
I know, but it's darker earlier, and I don't like it.
Oh, no, I hear you. Well, with that, I want to wish everybody have a great trading day. We'll be back here, bars closing 3:15. Today we'll have Mike Burke. Anthony, your friend Mike Burke is going to close out the day here at Ninja Trader.
Yeah, you guys have a great crew. Great crew.
Well, thanks. It's a pleasure working with you. And in the meantime, have a great trading day.
See you, everybody.